Well, first of all, thank you for coming here. We had a small talk beforehand, and it's great to have such a great team of lawyers, international lawyers here, that actually have done a lot of these things in practice and have the experience to talk today a little bit about what the challenges for the crypto space are, especially when it comes to being compliant and preventing your projects to get into serious issues in practice. So maybe, Irem, you can tell me a little bit about your experience in practice, what the biggest challenges are, and how your country regulates crypto in order to stay in line with international standards for anti-money laundering and being part of the financial system.
Thank you. Thank you so much for having me, firstly. I have been working with crypto people, crypto teams, actually, because when I get into the scene, they were really not lenient to getting into a corporation. So we were working with teams, and they were like trying to stay away from the government, from the regulations. They wanted to do nothing with the companies or anything like that. So when we said that you need a company for a bank account, they said, oh, we do not need a bank account, but they do. If you want to be a really well-incorporated and respected company, you have to get a bank account. You have to get your KYC, AML process in order. So when we first talked with the teams, they didn't want to do anything with the companies. We had to convince them that they had to get some companies, and we had to find some examples from the DAO structures and anything like that. And that was the first hurdle that we had to go through. But after that, they understood our point of view and why do we get the KYC. After a few disasters in the crypto scene, like Tornado Cash and like that. So they just got convinced that we can do this. But the governments are trying to, I understand what the governments are trying to do. You know, issuing, minting a money, a coin, you are declaring your own sovereignty as a government or a country. It's really important. Before the standard traditional financial systems, it was like that. If you're a new sovereign, if you're a new king, you would issue your money or mint your coins. So I understand why the governments are trying to regulate everything and keep it under the structure. But yeah, the teams are coming to the middle, the governments are coming to the middle, but in Turkish scene, I have to be frank about it. For a while, the Turkish government didn't want to regulate anything, because if you do not regulate it, it's not illegal, it's not legal, it's in the gray zone. Mm-hmm. So they let the crypto companies work for a while without any regulation. Mm-hmm. But after MiCA and other regulations and the Trump with the new wind behind the crypto, they decided to regulate it. We have one Act's main codex for it, and we have some supplying secondary regulations behind it. But we do not have everything under control. We do not have stable coins. It's similar to MiCA, okay. It's similar to OECD standards. Mm-hmm. But now, since the government is newly regulating the companies are in a bit of shock. Okay. So the investors and the crypto companies are running away from the Turkey, but it's something expected.
So at this point, you will move towards regulation. You have probably taken some international examples, as you said, OECD standards.
Yes, they are trying to. Before the regulations, we didn't have any KYC standards, mm-hmm. and the companies like Binance, etc., they were using their own standards, and it became an industry standard, and the government accepted it at one point, and it's a well-structured AMI policy. But before that, Turkey's name and the Turkish company's name with the crypto got into too many AML problems. Mm-hmm. So after that, the government is really adamant upon it, and they are trying to come down hard to the AML breakers. So Turkey is trying to recover from the bad influence and the gray zone that they have, but now I believe it's similar to the MiCA structure, not really closer to the other like Eastern companies or Eastern government structures. It's not similar to that, but more towards to the Westerns.
Great, and Ilija, maybe a question for you on that. Can you tell us a little bit more about your practice talking about Serbia, which is very close to the EU geographically, economically, but still not part? We've heard now that even in Turkey we have some standards like MiCA standards, but not exactly the same, and that we're moving more towards some regulation in this part of the world. How is it in your country? What would you say?
So we do have law on digital assets since 2021, so even before MiCA. And in general, it is similar to MiCA as a concept. So what are tokens, what are digital assets, smart contracts, what are the conditions to obtain centralized exchange license to issue tokens, prevention of market manipulation, and of course regulators. And so far, I think that we have not used the full potential of our law because many stakeholders, some regulators are still either scared or unwilling to embrace the innovation. But on positive side, we have seen 10 token emissions in Serbia, so 10 white papers approved by Serbian SEC, and 3 centralized exchanges that are fully licensed, out of which one is still not operational. They expect to be probably with the year's end. And what I've seen in practice is that banks cause much of the headache for some of centralized exchanges because they don't want to open accounts, and it's really difficult to operate if you tell the bank that you are doing something with crypto, because they perceive it as risky, especially AML-wise. Although in Serbia there are a lot of international banks, and in their headquarters in Austria, Germany, Italy, they embrace crypto assets, while in Serbia it's very reluctant approach and very conservative approach. And one example to just tell you how industry is approaching to AML and how they, I would say, fear of the banks that they would exclude them or shut down their accounts, is that, as I said, we had 10 token emissions, out of which 9 are digital bonds, and those issuers decided to conduct KYC procedures for their investors, although only one is a regulated financial institution dealing with factoring business. So they're obliged to have AML procedures, while others, like agriculture companies and solar power plants companies, do not really have to apply AML procedures, but they take this kind of unnecessary extra step to please, I assume, banks and regulators who are not even asking them to do so. So that's the current state of
Let me directly continue with the next question, because you said something really interesting here. Some subjects in the space and adjunct to the space are scared to do certain things, right?
Yep.
So you have quite some challenges there, and we can break it basically down to every level. Some countries, many countries follow basically now EU standards or close to EU standards and try to take existing solutions in order to be sure that they're compliant with international standards. many banks, especially more regional banks, banks in smaller countries, which one would maybe think on first hand are more flexible, actually become more conservative because they're not at the headquarter where big things, changes in policy can be decided, so we have challenges there. And what you said is also my experience for many of my clients, that they want to do everything not just by the book, but one level above, because they fear so much that there could be additional scrutiny, and because it hasn't been decided through the courts before, they rather want to do the extra step than not to do it. So my question to you there would be, do you think that there is an opportunity for countries to design different systems, systems that open more opportunities, that are more innovative than what we have now, and where would you see that?
Tough question. So, countries like Serbia or Turkey or other non-EU countries still have a lot of, I would say, freedom to do things differently because they're not fully obliged to comply with EU IML legislation, and that should be utilized in order to boost your industry, your innovative companies, and not to stifle them. But of course, there are a lot of other factors that play important role, which is politics and how do you approach some general or international trends. And one of those factors is the desire to protect your local currency at all cost. And collateral damage is often Web3, your local Web3 industry.
Okay, thank you. And maybe, Irem, also for you a question on this note. So we see that all the countries try to comply with specific rules, and we also see that some countries are internationally blacklisted, transactions are very limited. Our panel is about sanctions, it is about limitations. Can you tell me a little bit what you in practice have seen so far that impacts your work, that's related to sanctions, that is related to know your customers now more and more increasingly, basically, and what your opinions are on the positioning of crypto in the financial system in general?
In Turkey, the government, I would like to also go a bit back and add to what Ilija said. We have the same thing with the government and the authorities, and the problem is in most of the countries going forward with their legislations, they have one single authority responsible regarding the blockchain or crypto, you know, named under blockchain or crypto, government agency, etc. But we do not have it in Turkey. It is split between the technical side of the government, also the financial side, also the Turkish SEC, etc. Like 4 or 5 different authorities are chiming in for the blockchain sector, and it is really hard to keep up with their views and expectations because it's all different. The TÜBİTAK, the technical side of the government, handles the technical side of the blockchain, but they care about other stuff than the SEC of Turkey. So it's really hard to go forward with the regulations and the legislations and the practical, I mean, you have your codex from 2021, we had it in 2023, and it's still in developing system, and it's not still clear, and the government, we still do not have any white papers. Most of the companies, actually all of the companies working in Turkey under the crypto work with the permanent licensings, temporary licensings. Okay. They do not have their final licenses. We do not, they are working, they are serving to the clients, but it's not final. So it's really hard to go with it. And the AML and KYC policies, actually tied to the government too much, because Turkish government has a really developed e-government system, and since we have an e-government and it's encrypted and everything like that, the government wants the companies to use their KYC process and AML check and sanction check from the government system. So if you are a person really taking care of your anonymity, if you are taking great deal in your assets, then you do not want to go with licensed SEC or licensed other exchange DEX. So it's really hard to please the clients in the crypto sector. Like I said, in Turkey we have too many e-government systems, and the government really relies on e-government for the companies' KYC and AML protection.
Would you say that the systems are too much adjusted to the traditional financial and banking system?
Yes, unfortunately, yes. The government is actually, after the crypto sector getting developed or getting regulated, the government also put more pressure on the banks too. They didn't, before then, they didn't take in great deal of the taxation of the banking transactions and anything like that. They wouldn't go chase them. But after the crypto and AML problems, they said, okay, there's a problem. We also should look into the banking side of it, because if you are using SEX, you have to use a bank account in Turkey.
Okay, so talking and taking a little bit into account what the previous panel had talked about, Europe is introducing the digital euro, which will be very important for national fiscal and monetary sovereignty, and which will have a huge impact on the financial system in one way or another. How do you think this will impact the crypto sector? Maybe a short answer from both of you.
Yeah, of course. Ilija, please.
Short answer. Depends how they promote it and what rights do they allow. So what are the possibilities to cancel transactions, freeze the assets? It depends how it will be adopted, I would say.
I might just say, because as someone in the European Union who is quite involved in the area, one key aspect will be that no transaction is allowed to be cheaper than a digital euro transaction. So if you accept any means of payment except cash, digital euro cannot be more expensive, but can be less expensive. So it will be certainly something that will be there and that will be prevalent. It will be limited by the amount of digital euro you can hold, so usually not big transactions, but it will change the space in order that it will be something that you have to build around. So it's a showing of monetary sovereignty, and there the question comes in, how will crypto be able to adapt, and what will we do as people involved in handling the regulatory part for our clients? So.
Yeah, in Turkey we also have a Turkish lira CBDC project ongoing, but it's a project ongoing, and the government also wants to work with the governmental technological teams. So it's really hard to gather the technical team and the private sector all together. So it's really going slow in Turkey. Maybe it's going to take more time, the digital euro, but I believe the CBDCs and the stable coins are going to relieve too many pressure from the monies hemorrhaging and the governments or countries dealing with the great inflations like Turkey and other countries like Nigeria is really good with the CBDC and the stablecoin projects, and they are, like Turkey, handling too many inflations, and that's why they and also we need it.
Perfect. Thank you very much. As I see, our time is already up. This was really fast. I think we talked about some interesting things here. Sovereignty, anti-money laundering. We've learned a little bit of what's going on in your countries, but also what's going on globally. So I think we have interesting times ahead of us. Thank you very much.
Thank you, Chairman.
Thanks for having us.
Thank you very much.